Tonight, we begin with an announcement that tax experts, financial advisors, and retirement advocates had anticipated, requested, and demanded for years. A policy change that unfolded not over decades, but in a single legislative session. A single session that could save millions of Americans thousands of dollars. A single session that finally addresses a broken system. A single session that changes everything for seniors and first-time filers in 2026. What the IRS announced this month crossed a threshold that taxpayers had hoped would come sooner. And when that threshold was finally crossed, advocacy groups did not hesitate. They responded with relief, urgency, and a clear message. Act now before you miss out. For years now, there had been signals. Not official policy statements, not formal announcements, just signals that the IRS was preparing something significant for vulnerable taxpayers. The IRS has been aggressive, yes, but they have been inconsistent in their aggression. Their enforcement actions have followed a certain pattern, a rhythm, almost a predictability. But what set off alarm bells among tax professionals this year was that the pattern shifted. Experts who monitor IRS policy changes know the indicators. The quiet internal memos, the sudden budget reallocations, the pilot programs in select states, the sudden softening of enforcement language. All of that started happening simultaneously. And whenever the IRS goes quiet on enforcement, it means something is about to change dramatically. For seniors living on fixed incomes, the penalty system had become a nightmare. Miss one quarterly estimated payment? Penalty. Underestimate your tax liability by a few $100s? Penalty. File one day late because you were waiting for a 1099 that arrived late? Penalty. And for first-time filers, young adults entering the workforce, immigrants filing their first American tax return, gig workers navigating self-employment taxes for the first time, the system was even more unforgiving. They didn't know what they didn't know, and the IRS penalized them anyway. Early this month, the Treasury Department released what they described as a comprehensive penalty relief framework, including exemption categories that had not been formally codified in over 15 years. These are the kinds of policy changes that the IRS only implements when they are signaling something very specific. A shift in enforcement philosophy, a response to political pressure, or a recognition that the current system was fundamentally broken. Tax professionals didn't know which category this fell into, or whether it fell into all three at once, but what they did know was that the IRS was changing posture. And when a federal agency shifts posture without a major scandal forcing their hand, even by small measures, everyone pays attention. Here's what the new 2026 penalty exemption includes. For seniors, age 65 and older. First-time penalty abatement now automatic. No request required. Underpayment penalties waived for those with income below $75,000. Late filing penalties reduced by 50% for those on Social Security. Extended payment plans with zero interest for qualifying seniors. For first-time filers. Complete penalty waiver for first 3 years of filing. Automatic extension of 60 days for any first-time filer. Educational grace period for self-employment tax miscalculations. Dedicated helpline with extended hours for first-time filer questions. This wasn't a minor adjustment. This was a fundamental restructuring of how the IRS treats its most vulnerable taxpayers. The guidance issued by the IRS this week was not normal. It was not routine. It was not symbolic. It was urgent. Officials after officials described the new exemption framework as overdue, substantial, and perhaps most importantly, limited in scope to those who take action. That last part is critical. Because the exemption only works if you claim it. The IRS is not going to automatically apply these benefits to everyone who qualifies. You have to know about them. You have to request them. You have to file correctly to receive them. Advocacy groups did not wait for seniors and first-time filers to figure this out on their own. In fact, their response this week was among the most coordinated we've seen in years. Here's what we know. Within 48 hours of the announcement, AARP launched a nationwide awareness campaign. These weren't generic tax tips. These were targeted action alerts, resources that AARP only deploys when they believe millions of their members could benefit immediately. The National Taxpayer Advocate issued guidance. H&R Block updated their software. TurboTax added new exemption checkboxes. The entire tax preparation industry mobilized because they understood this is real, this is happening, and people need to act. Tonight, IRS sources confirmed that the exemption framework covers penalties on estimated tax underpayments, late filing fees, and accuracy-related penalties, including the notorious 20% accuracy penalty that had recently been expanded in enforcement for what analysts believe was revenue generation. The IRS softened enforcement before the backlash could become unmanageable. They addressed the senior penalty problem. They addressed the first-time filer confusion. They addressed the self-employment tax gap that was trapping gig workers. In other words, the IRS targeted the systemic friction points, the barriers that were preventing compliance rather than encouraging it. This is what made the Treasury's announcement so significant. The old penalty system wasn't just punitive, it was counterproductive. It represented the kind of policy that could discourage filing altogether if left unchanged. And the IRS, understanding that fully, responded with reform, not recklessly, not temporarily, but structurally. They didn't just waive penalties for 1 year. They didn't just offer symbolic relief. They built a new exemption category into the tax code. They created a permanent pathway for seniors and first-time filers to avoid penalties they never should have faced in the first place. Here's what qualifies you. For the senior exemption, you must be 65 or older by December 31st, 2026. Your adjusted gross income must be below $75,000, single, or $150,000, married filing jointly. You must have filed at least one tax return in the previous 3 years. You cannot have willful fraud on your record. For the first-time filer exemption, you must be filing your first federal tax return ever, or you must be filing independently for the first time after being claimed as a dependent. You must not have any prior IRS debt in collections. You must file by the extended deadline of June 15, 2026. And here's where the story becomes even more significant. Policy analysts now believe that the IRS's penalty exemption was designed to test the feasibility of broader tax simplification after years of growing public frustration. The IRS wanted to see whether targeted relief would improve compliance rates. But instead, something larger happened. Advocacy groups didn't just accept the relief quietly, they amplified it with messaging that was so clear, so actionable, that even Congress noticed. You don't get Congress's attention on tax policy easily. But this month, the exemption framework did. Senior policy advisors, speaking with financial media under background rules, described the IRS's shift as strategic de-escalation, a way to rebuild trust with taxpayer demographics that had grown increasingly hostile to the agency. But advocacy groups proved this month that they remain both vigilant and mobilized. Their response campaigns were not only rapid, they were targeted so precisely that within 1 week, over 2 million seniors had already begun reviewing their penalty history for potential refunds. That engagement matters because it shows that Americans will respond to genuine relief. It shows that the IRS is not an untouchable bureaucracy. They are an agency that responds to pressure when that pressure is organized and sustained. As reports continued coming in throughout the week, we learned more about the scale of potential savings. AARP estimated that 12 million seniors could qualify for immediate penalty relief. The National Taxpayer Advocate projected $1.2 billion in waived penalties over 3 years. First-time filer advocacy groups calculated that 4.5 million young adults would benefit in 2026 alone. This wasn't just a policy tweak. This wasn't just a press release. This was structural tax reform. This was penalty system modernization. And modernization is the one thing the IRS has struggled to achieve since the Taxpayer Bill of Rights was passed in 1988. For every enforcement expansion they have implemented, taxpayer advocates have countered with something that forces reconsideration. This exemption framework is the latest, and perhaps most significant, example. Remember, the IRS thought aggressive penalties would improve compliance. They thought fear-based enforcement would increase revenue. They thought seniors and first-time filers would simply adapt. But this month, the exact opposite was proven. Punitive penalties were discouraging filing. Fear-based enforcement was creating hostility. Seniors and first-time filers were avoiding the system entirely. The IRS had to change course, not because they wanted to, but because the data demanded it. What makes this moment so important and so time-sensitive is that the IRS's exemption framework happened at a time when the agency is under enormous pressure. Congressional Republicans want reduced IRS funding. Congressional Democrats want expanded taxpayer services. Taxpayer advocates want permanent penalty reform. The Treasury Department wants improved voluntary compliance rates. IRS leadership is balancing these demands while managing a $80 billion modernization initiative. And when agencies in that position make sudden policy shifts, they're not doing it from comfort. They're doing it from pressure. They're doing it from necessity. That means this window of opportunity could be temporary. Future administrations could reverse these exemptions. Future Congresses could modify the qualifying criteria. Future IRS commissioners could interpret the rules more narrowly. If you qualify, you need to act in 2026, not 2027, not later, now. The Treasury's guidance, now publicly available on irs.gov, was designed to signal that the IRS is not willing to sacrifice compliance for short-term penalty revenue. Officials said plainly that the previous penalty structure was inconsistent with voluntary compliance objectives. That is bureaucratic language for, the old system was broken and we're fixing it. You don't usually hear that admission from the IRS unless something serious forced their hand. And something did. Years of advocacy, thousands of taxpayer complaints, congressional pressure, and data proving that punitive penalties were backfiring. Meanwhile, the IRS commissioner addressed stakeholders in a measured, carefully worded statement this week. He said, "Penalty relief for seniors reflects our commitment to treating taxpayers fairly." He said, "First-time filers deserve guidance, not punishment." And he said, "These exemptions represent a new chapter in IRS enforcement philosophy." These are not rhetorical flourishes. These are statements from an agency that understands just how damaged its public reputation had become, and how much work remains to rebuild it. Here's what makes the situation even more urgent. The IRS's exemption framework wasn't announced in isolation, along with the penalty relief. The IRS also announced increased audits for high-income earners. The Treasury expanded cryptocurrency reporting requirements. The agency increased enforcement funding for offshore account investigations. All of this happened within the same month. When the IRS offers relief in one area, they often tighten enforcement in others. That means the exemption window for seniors and first-time filers is real, but it exists alongside increased scrutiny for other taxpayer categories. If you qualify for the exemption, claim it now while the focus is elsewhere. Tax analysts are now considering several possibilities. One is that the IRS is preparing broader penalty reform for all taxpayers. Another is that the IRS is attempting to improve its public image before the 2026 funding debate. A third possibility, the one encouraging advocates the most, is that the IRS is genuinely attempting to shift from punitive enforcement to compliance assistance. But regardless of motive, the exemption is real. You don't need to wait for perfect policy. You don't need to wait for permanent reform. You don't need to wait for broader changes. You need to claim what's available now. What we're watching now is a test of implementation. The IRS wants to see if targeted exemptions improve filing rates. Taxpayers want to see if the relief is genuinely accessible. Congress wants to see if the program justifies continued funding. And advocates want to see if this becomes a model for future reform. Everyone is watching, and how taxpayers respond in 2026 will determine what happens next. Tonight, we've heard from tax professionals who are now updating client files across the country. They say the exemption criteria are clearer than expected. They say the application process is simpler than previous relief programs. And they say the IRS's decision to make first-time penalty abatement automatic for seniors is a genuine breakthrough. But seniors and first-time filers are not waiting passively. In fact, they are already acting. Their response this week, informed, organized, and immediate, sent a message to the IRS that Americans will engage when the system treats them fairly. And it sent a message to Congress that tax reform doesn't require massive legislation. Sometimes it just requires common sense. As the 2026 tax season approaches, we expect more details to emerge about implementation procedures. But what we do know is that the IRS's announcement was timely. It addressed a real problem. It provided a real solution, and it created a real opportunity for millions of Americans. What happens next will depend on what taxpayers do in the coming months. If they claim the exemption, this moment will be remembered as a turning point. If they miss the window, the IRS will have less incentive to expand relief in the future. The opportunity is here. The question is whether you'll take it. And tonight, for the first time in years, the IRS appears to be listening. The penalty enforcement machine is quieter. Noticeably quieter. And when the IRS is quiet, it means they are recalibrating. It means they are watching how taxpayers respond. Because this month, the IRS learned something they needed to hear. Fairness works better than fear. Relief works better than punishment. And Americans will comply when the system treats them with respect. This story is far from over. But tonight, one thing is clear. Seniors have a new protection. First-time filers have a new pathway. And the 2026 tax season could be the most taxpayer-friendly in decades. And we will be here, watching every detail as the next phase unfolds.